Hi everybody, it's me, Gregory Mannarino, back again for my post-market wrap-up. Actually, this is the first wrap-up of the week, being that yesterday was a holiday, and I did get to enjoy myself. I got a little color over at the pool. I don't know if you could pick up on that. Anyway, so Tuesday, September 4th, in case I didn't say it, 2018. Let's talk about what's going on and a couple of things that are just too funny or too stupid to actually just matter, but it really does. So stocks finished flat across the board. However, earlier today, the Dow Jones Industrial Average was down about 160 points. You know, they got in there and someone thought this was a really good day to get in here and start buying up those stocks. Well, it could be, maybe not, I don't know. But let's put a couple of things into a perspective so we could have a better picture. So the story of the day, beyond any shadow of a doubt, was the dollar. The dollar's strength, extraordinary, actually. And gold got hit. Silver got slaughtered. And unfortunately, that's the way it's going to go here until it doesn't. Now, I should have spoken about this earlier today, but I did not. So I'm going to cover it now. Big sell-off today in the bond market, and that did push the 10-year yield higher, although the 10-year yield still remains in that sweet spot. If the dollar continues to get stronger and by some miracle they don't start propping up those bonds, there's going to be a problem. I would be willing to literally bet that we are going to see bond market propping up enough to make our eyeballs explode if we were to look at the chart right on my website, traderschoice.net. I believe that's what we are going to see. Now, here's the stupid part that is just frankly out of control. So I was playing a little game today with myself. I'm watching the COD, you know, the Confederacy of Dunces. Yeah. All day long. As a matter of fact, I stopped counting at 21. It was way more than that, where they mentioned that Amazon today hit a $1 trillion market cap. I mean, they kept pushing this and pushing. I kept going 1, 2, at 21. 21 mentions of this. You know, it probably was twice that by the end of the day because it was a distraction. Look here. Let's look at Amazon hitting $1 trillion. But don't look over here. They do not want you to pay any attention whatsoever to what's going on in Europe with the German banks, with the emerging markets. However, I will give them a little credit. They did mention, a couple of the members of the COD there, emerging markets several times, probably about 5 all day long. They just, you know, in passing, emerging markets. And then they slide on to something else. They don't want to address what's going on over there. They don't want to talk about the meltdown over there with regard to the currencies, the knee-jerk into the dollar. No. It's all about Amazon at $1 trillion. I mean, you just got to laugh at this. And it's the same charade that is played on everybody over and over again. You know, don't look here. Make sure you are looking here. Whatever. Amazon hitting $1 trillion. I mean, are you surprised to find out that Amazon hit $1 trillion market cap today? No. But they, you know, they were like getting all hot and bothered about it. Of course, they're being told, talk about Amazon, talk about Amazon. Don't mention any details whatsoever about emerging markets, about European banks, German banks, Italian debt, Turkish lira. No, don't talk about it at all. It's just so stupid. It really is, honestly. All right, so look, here we are right now. A lot of people were writing to me today talking about this market rolling over here. Look, I'm not convinced of anything. All I do know is a maximum effort is going to be put in to prop this up. I do have several credit spreads open. So I almost don't care which way the market goes right now. I have these set up in a very safe way. So it doesn't really matter to me. I don't care. All I do know is the fakery will continue, the distractions will continue, and that's it. The issues across the spectrum, keeping us divided, whatever they got to do. And unfortunately, that is the story, people. So keep an eye on that bond market. I believe we're going to see some hardcore propping up very soon, especially if the dollar continues to strengthen here with escalating trade wars, currency meltdowns, debt crisis over there in Europe, which you don't hear about at all, debt crisis here in the United States, the fact that we now have a debt to GDP ratio over 100%. Shh, don't mention that. Do not mention the fact that the labor force participation rate today is lower than the financial crisis. No. Do not mention that. That would be a big downer. Do not mention the fact that the money velocity, the rate at which cash is moving through our economy, remains near historic lows. Well, you cannot have any kind of a recovery or a boom or anything at all that resembles that if cash is not moving through our economy. Why do you think last month or so, you remember the Treasury Department said, well, we got to sell some more treasuries because we cannot even finance our day-to-day activity. If cash isn't moving through our economy, they're not collecting tax dollars, so they have to make up the slack by selling more treasuries. So the whole charade about this being some kind of a boom is a joke, and I think you know that. All right, with that said, we will reconvene right here tomorrow morning. Over and out.